Rob, Thomas Cook, the UK-listed tour operator, has reported after-tax profits for the first time since 2009. I guess that's good news. What have they been doing?
I think it is absolutely good news. This is a business that had two problems. Its first problem is that it was a tour operator. And the travel business has changed a lot over the last couple of decades because of the internet. Perhaps you've heard of it. The issue is that it used to be a very intermediated business where middlemen and distributors controlled a lot of the flow. As we all know, it's become a business where it's very easy to shop direct. This has put pressure on tour operators and travel agents. Thomas Cook, of course, a tour operator. So number one, business under secular pressure. Problem number two, Thomas Cook did a lot of acquisitions, paid a lot of dividends, bought back shares, developed a big mountain of debt that a couple of years ago almost brought the whole edifice crashing down.
Okay, so they had a lot of debt. They have less debt now?
They
What's
have
the debt
a bit less
now?
debt now. They had a near-death experience in sort of 2011, 2012. They refinanced their debt. They sold some assets. They simplified the company. They started cutting costs. And the report we got today is sort of the long-awaited payoff for those hard decisions they made then. The stock has come back a lot since then. And still, there is a lot of debt on the balance sheet. So
what are they going to do? I mean, how long is it going to take to get this debt down?
So there's about 1.4 billion pounds in gross debt. And the result of that is that, so in their last fiscal year, which they just reported, they had about 210 million pounds of operating profit. About 180 million pounds of that went to financing the debt. So the highest priority for this company has to be using its free cash flow, and it is generating some, to pay down that debt.
Okay, great. So the shares are up a lot.
They're up a lot since 2012. They went up very sharply. Over the last year, they've come down again, but they're still much higher than they were in really the bad days.
And do you think that they can go higher? I mean, it seems like to me that the debt rundown that you're talking about is a very slow one.
I think it is going to have to be a slow rundown because the company also has to invest in its business to keep it competitive in an ever more competitive market. I think, however, if the fundamentals of the business don't get worse, and that's a bit anyone's guess in the changing market for travel, if the fundamentals don't get worse and they use cash flow to pay down debt, value will go from the bond holders to the equity holders and the stock will do okay. But that assumes that the travel business remains relatively stable, and I do not have an answer for you about the probability of that.
That seems fair, Rob. Thanks very much. Very interesting.